painful part is that up to 5-6 months ago, the average home loan rate between 5 and 6% was the lowest in years. It was a historically low rate to get a home loan. No banks or very few banks at all give a fixed rate option, and people jumped in thinking that this is a great opportunity. Cut to 6 months later and the whole picture has changed. What will this do to the demand for residential real estate, and what can home loan seekers, the home loan borrowers do to cushion themselves? To speak more on this, I'm joined now by Baman Rastam Irani, CMD of Rastamji Group and VP of Credai, Anil Rego, founder and CEO of Right Horizons, and PV Subramaniam, CEO of www.subramani.com. Welcome to all of you, and thank you so much for speaking with us today. Baman, let me begin with your take and the impact it could have on the interest in buying residential real estate. And I was keen to talk to you about this because I remember our conversations when those interest rates were at historical lows. And everyone in the real estate sector was saying, this is the best time, don't lose the opportunity, go in, get your dream home now, you'll never get these rates again. Cut to 6 months later, that dream is turning into a nightmare.
Not really, Tamanna. See, first of all, nothing is permanent. I think the example that you all gave was on a steady state basis that, interest rates will stay where they are for a long period of time. I do understand that these will increase, again, given that increase their interest rates, but they're not going to be permanent. Like they go up, it will come down once the inflation is under control. And most of the experts are talking about that being as early as 2024. Second, Tamanna, obviously you have to see the starting point. We started off at 6.5, like you mentioned. It was probably the lowest interest rates that at least someone as senior as Deepak Parekh went on record to say that he's never seen such interest rates in his life. The starting point was very, very low. Thirdly, Tamanna, I can tell you this, that basically the home buying, at least I can talk of the MMR market, the largest home buying, about 42% in September, or 43% if I'm right, in September was under 1 crore rupees. But equally on its heels, between 1 and 2.5 to 3 crore rupees, the buying power was as high as 43% of the registration that took place. So it kind of tells a story that home buying is something that is on the minds of most of our people. More importantly,
has the demand continued to grow?
One second. Tamanna, there's one statistic which everybody should know. Some data points out that some years back, home loans, to pay back home loans, the person had to give as much as 50% of his salary. A single income would be paying as much as 50% of his salary and, trying to pay down his home loans. Today, with the increased earnings of most of our brethren or of our populace, you see that the home loan payback is at the rate of about 33 or 34%. I'm not clear on the exact number of your earnings. So all of this put together still leaves home buying as one of the best options today. And Tamanna, like I mentioned before on your show, actually a purchase of a real estate property is one of the best hedges you have against inflation.
Baman, just to get more detail from what you're saying, because you're in the market, you're seeing the trends. You talked about the 2.5-3 crore bracket seeing good traction. And this is reflective really of what's happening in the economy, where affordable housing is becoming unaffordable, but what would be deemed as luxury projects or higher end projects continue to have good traction. That in the bigger picture of housing all Indians is not necessarily what is required, is it?
I think, we get swayed a little bit too much by an article appearing in the paper saying that, let's say even 50 apartments got sold in the last 1 year that were 100 crores plus. That's still an insignificant number, Tamanna. One has to look at where the volume is, right? And the larger volume comes out of the 1 to 3 crores or maybe the 50 lakh to the 3 crore bracket is where I'd say 80-85% of your buying power is being expended in. So let us not take these highlighted news and just, panic about them. Like I told you, two reasons. One is they're insignificant. Two is even this inflationary pressure that we are seeing right now, according to the experts, because it's going up or going down so fast, the economy, it will rise back with that much bounce back as well.
All right, that's what we can hope for. But, as of today, the pain is there. PV Subramaniam is joining us. PV Subramaniam, tell us about what the real impact is on household income, because these are the kind of commitments that are long-term commitments. Would you say in the long term, in the big picture, it evens out? Because remember, it's a 20-year loan. So if today your tenure is going up by 24 years, going up to 24 years because interest rates are going down, can we hope that in that period there will be a reversal in that cycle, where your interest rates will also come down because these are floating rate loans, isn't it?
See, Tamanna, what happens is when interest rates go up, all asset prices have to come down, right? So that happens. So when the EMI increases, the normal reaction for people to say, oh my God, my EMI has increased. But actually, if you're young, it makes sense to increase the tenor. I'm going against what others would say, and increase your SIP in equity funds. If you are going to judge me over a 20-year basis, Tamanna, assuming you get something like 12-13% return in equity and 6 to 8% interest what you pay in housing loan, you're better off increasing your SIP amount rather than increasing the amount that you will repay. So increase the tenor. That can happen only if you're young. If you're 27, 30, you can take a 30-year loan. But if you're already 40, you will not be allowed to increase the debt as well. Pay over a longer period of time, and definitely, Tamanna, over a longer period of time, interest rates have to come down. Will it come down in 2024? Will it come down in 2025? I don't know. However, if you're not very sure about your job, if you're a little insecure about your job, and we've seen media and all those companies, a lot of jobs have been lost, and financial services also lost, a lot of jobs have been lost. If you're a little worried and little insecure, repay the loan faster. Otherwise, equities will definitely give you a better return. If you're very young, you have not yet committed, stay in a rented house. Much better option.
So you're saying as of today, wait, I'm going to get you on that last point. You know, this is the eternal debate. And a lot of millennials, Gen Zs are saying that we're not going to be like our parents and the Gen X, the boomers, etc., who have to have a home to your name. It doesn't matter. We will stay on rent and we will invest that money in a more liquid manner. You're saying that sounds like a good idea about now, Mr. Subramaniam?
Absolutely. I mean, look at even a car and driver. A driver alone will cost you 20,000 rupees. Ola, Uber, your monthly bill would be less than that, right? So the renting options are definitely much better in a country like India, in a city like Mumbai.
Yeah.
A 1 crore house is available for about 1,20,000 rent. That is about 1.2%, maximum of 2%. Because if you give it on rent and you pay society charges, etc., you get very little returns. It's not a great investment if you ask me. However, it is an emotional need for people who come from broken homes or, people like that feel insecure living in a rented house. But today, actually, the landlord is more worried that the tenant will leave. The tenant should not be worried that the landlord will sack him.
I want to get your view, Anil Rego, but give me a second because I have to get Baman's response to what Subramaniam has just said. So those who are emotionally fragile and from broken homes are the ones who need to buy houses right now. He's telling the kids, don't make that mistake. For you, that's bad news, isn't it, Baman? You want people to buy homes.
I think we should look at the entire context of what Subramaniam has just said. He said, first of all, that if you look at the entire picture and you are a wise investor and you should get returns out of equities, then really this should not bother you. And we cannot look at any one thing in isolation, so I kind of agree with what he's saying. But I also want to bring to everybody's attention that post-COVID, what has really happened is every millennial that we thought would never buy a home and would go into only renting homes has changed his mind and his or her mind, and they're all buying homes as of right now. If I'm not mistaken, the data shows that the average home buying age has dropped by around 8 years. So if that is the case, we can definitely see that the number of insecure people or people who are extremely worried is low. And secondly, just so that you all know, the actual rentals in Mumbai are rising a lot as of today.
I'm going to get Anil Rego into this debate. First, the impact, because let's start from what we're trying to talk about, the impact of increasing interest rates on your home loans. What should you do if you are still sitting on the fence and you were not sure whether you wanted to go in for a home loan or not? Maybe you missed that 5.5%, 6% period. You're now looking at 8.25 or thereabouts. What should you do? Hold on to it?
Yeah, so I think, it depends on the circumstances of people, right? So I also would agree for somebody of a lower age group, right? And where the risk profile, you can take a higher level of risk, then it makes sense to use avenues like, the equity markets and, take higher risk, right? And that will probably give you a better return. The second is, I think at this point of time, keep in mind that after, a tax break also, you may have a little bit of a lower cost there, right? So it's for somebody who is, let's say, can afford it, has a diversified portfolio, already has a reasonable bit of equity, as part of, including his debt and, balancing out his portfolio. I think one could, utilize it, and if you are in the higher surcharge slab, then that may just make it, a little better out there. But I would suggest that, it's maybe for your own house. I'm not suggesting, say, real estate as an investment. So you have both the psychological benefit, because what I believe when you're managing people's money and when they are also, investing, they should also be comfortable. It's not just that, just take the higher level of risk.
People right now not to buy homes. Anil, are you advising people not to buy homes, or are you telling them to buy homes?
Yeah, so I'm saying both. I'm saying up to a certain age, I would stay away. Okay, maybe, once they have passed their 45 and they have built other assets, then I think that's something that you can consider, for a first home. And it also gives you, an emotional, support out there.
Wow. So, both of you, Anil and Mr. Subramanian, have sort of written off all the 40 plus people out there and have given advice only for young people who have loads of years to invest. I think it's a little unfair. So I have to ask you, Mr. Subramanian, what about all of those 40 plus people who have loans? What do they do?
They continue investing. They continue doing their SIP, because I'm still saying, if you don't judge me over 3 months, 6 months, 3 years, I'm still sticking my neck out that you will be able to get a better return in a simple index fund, or a big, good large cap fund, or a large and mid cap fund will give you a better return than home loan. I'm willing to eat my arm if I'm wrong. That is over a 20-year period. Don't ask me every 3 months, oh, you said then this is wrong, right? So over a 20-year period, if he's a 40-year-old and he's going to retire at 60, that's a better bet. For a younger person, the risk is not everybody is lucky to be working in one location all their life. So when they change jobs, if they're in, say, Baroda, Singapore, Dubai, Chennai, Gurgaon, what do they do? You can't buy a house in every place. So you stay on rent, and exactly like what Anil Rego said, once you're 45, 47, you put a lot of your own money. People, say, oh, all rich people buy a house. Of course, Aditya Puri bought a house, Prashant Jain bought a house, Deepika Padukone bought a house, but they wrote out a single check while selling out something else, right? They did not take an EMI. I'm saying don't take a very heavy loan and then suffer, because if you lose your job, you will still have to pay the EMI. That is where my caveat.
Does it make sense to prepay? Does it make sense to prepay?
No.
Loans?
No. If you're good at investing, no.
Okay. I'm just going to ask Anil Rego about that as well. Prepay your loans, or use that money to cover up the pain of an 8.25% interest. Try and make more money, say, in the markets, SIP, etc.
Yes. Okay. Because right now, the way one looks at it, relatively on a post-tax basis, for somebody, the cost may just be, say, 5.5%, 6% or so, right? Of course, if the loan is much larger, even then, I would think that the equities should deliver a better return. Now, if you go back to sort of past days where interest rates, say, went on your home loan went to almost like 12%, then I would change my view, right? So I would say that anything up to, say, 10, 11%, I would not say prepay my loan. I would still continue using, SIPs and other investment avenues, and possibly you may get some great opportunities, in the current volatile market conditions as well. So I think don't prepay, continue to maybe pay, but at a certain time later, you may just find that if interest rates have really shot through the roof, and rather than parking in, let's say, a debt fund, if I've taken out money, etc., then I may go back and repay your loan.
Okay, so you have to be fluid with that situation. Baban, what is the outlook looking like as far as you're concerned? Are you feeling optimistic right now, or do you see this high interest rate regime dampening spirits to some extent for residential real estate?
So I'll tell you something differently, Tamanna. Every time the interest rates have gone up, there have been schemes that the government has brought about because they realize that this is a GDP driver. Okay. Second is that developers themselves have become savvy enough to understand that a certain part of the hit would have to be taken by them to keep at least the mood of the home buyer high. Thirdly, as of right now, whatever data we have in front of us, September has been a great month, and we expect, given that Diwali is round the corner, October, November will also be great. Having given that, I'm not taking away from you the fact that a higher interest rate is a mood dampener, but till the time this crosses what the pre-COVID rates were, I don't think people have any reason to complain. And even if it reaches the pre-COVID rates by a bit, like I told you, the incentives that the government could bring is a reduction in stamp duty that give a lot of upfront relief, and developers themselves will also be able to kind of take part of the flow of the interest rate. So overall, I'm confident that the home buying will continue, and we are hoping that consumers realize that more and more that they, I wanted to actually throw a question at Subramaniam ji, that tell me the same if you are a home buyer, and your 40s, and you buy a home, wouldn't you be a lot more at least mentally in a better space for your old age? So these are simple things to consider. A well-balanced portfolio, like Mr. Anil Rego says and Mr. Subramaniam says, should be doing the trick.
So I bought my house when I was 52 or 53, and I paid for by selling off another house which I had bought. I never borrowed, so my money worked for me, and then when it did well in the market, I used it to buy a house. I did not give any interest to HDFC.
You went from a smaller home to a larger home, Mr. Subramaniam?
I had one. I was on rent for 15 years, and I used all my. Then I used my equity to buy a house.
Good.
With very close to zero borrowing.
Okay.
Excellent.
Everyone might not have that opportunity. I think we have to look at the situation in terms of one size does not fit all.
But Tamanna, everybody doesn't get to work only in Lower Parel.
Nobody gets to stay in Lower Parel if they work in Lower Parel. Let me tell you that. So that's a whole different story. But I think this is an interesting conversation, and these are questions that people are now asking themselves. How to make the most of those incomes they have. Should they prepay loans? Should they bet on the markets and hope to beat that 8.25%? Look at what works for you, but just hoping that you won't get hurt and the tide will pass may not be enough. Thank you so much to all of you for joining us on the show today.
Thank you, Tamanna.
Thank you.
Thank you.
Thank you, guys. This was a pleasure.